All right, the markets just closed for Thursday, January 22nd, and we really need to talk about what just happened. We saw a massive surge in Korea while things were a lot quieter over in Hong Kong and China. We're going to dig into an analytical report that tries to explain the powerful forces behind all this. So, to really wrap your head around the kind of energy we're seeing, you have to start with this number. The entire South Korean stock market has exploded by 76.2% in just 1 year. I mean, that is an absolutely incredible run, and today's action just keeps that story going. But here's the real head-scratcher. Today's big rally happened even though we got news that South Korea's GDP actually shrank last quarter. So what's going on here? Why is the market just completely shrugging off what should be pretty bad news? Let's start breaking down the pieces of this puzzle. Okay, so here's how we're going to tackle this. We'll start with today's numbers, then we'll dive into the big theories explaining why Korea is on such a tear. After that, we'll shift over to China's situation, walk through a specific quant trading strategy, and look at the forecast for the rest of the month. And then we'll wrap it all up with the key takeaway. All right, first things first, let's look at the actual numbers from today's close. Yeah, Korea was the standout star today, no question. The KSPI is creeping so close to that huge 5,000 mark. But look at the tech-heavy Kosdaq, a full 2% pop. That's where the real action was. Now, compare that to China and Hong Kong. Much smaller gains. Over there, it's more of a stabilization story, not the kind of raw power we're seeing out of Korea. So to solve that puzzle, the market rallying on bad GDP news, we've got to look past the day-to-day data. We need to dig into the bigger theories that explain why investors are acting this way. This really gets to the core of it, right? The old school view, Homo economicus, basically assumes investors are these perfectly rational robots that just react to data. But then you have this other idea, professional intelligence, which says, hey, wait a minute, the real pros, the smart money, they're looking right past the short-term noise, like one bad GDP report, because they're focused on the bigger structural health of the market. And that bigger picture, well, this quote from President Lee Jae-myung just nails it. The dominant narrative driving the market right now, the story everyone believes, is that this isn't some crazy bubble. Instead, it's the market finally correcting what's known as the Korea discount. The thinking is that major reforms are finally unlocking the true value of these companies. And that story is way more powerful than one little piece of bad data. And there's another really fascinating idea at play here. It's a theory called cycle synchrony, which argues that markets don't move randomly. They move in these powerful overlapping rhythms. The idea is that this incredible surge we're witnessing is happening because several different major cycles are all peaking at the exact same time. So what are these cycles? Well, the report zeroes in on 3 specific ones, all coming together right now. You've got the 40-month semiconductor cycle, a massive 54-year technology wave that's all about AI, and the regular 9.6-year economic cycle. So when all 3 of these massive waves crest at the exact same moment, well, you get a tidal wave of momentum that can just blow past a single negative news report. Okay, let's pivot now and talk about China, because what's happening there is a totally different story. It's not about a huge, broad surge. It's much more about a cautious stabilization, with some very clear winners and some very clear losers. And the best way to understand China right now is to think about the rules of the game. There's this theory from Simon Johnson that says economies thrive when the rules are fair and clear. In China's tech sector, we're seeing more inclusive rules, things like stronger property rights for Baidu's new chip unit. That makes people want to invest. But in the property sector, the rules are extractive. They're murky, they're unclear for investors, and that scares capital away. It's simple. The market is rewarding the good rules and punishing the bad ones. Okay, so we've gone through the why. Now let's get into the how. As in, how would a professional quantitative trader actually play this market? And just a heads up, what we're doing here is explaining a strategy from the report, not handing out financial advice. The strategy laid out in the source report is called Alpha AI 2026, and it's built from the ground up to navigate and capitalize on the very market conditions we're seeing right now. So how does this thing actually work? Well, it's got 3 main pillars. First, the engine of the whole thing is momentum arbitrage. This is basically a bet that the incredible AI momentum we see in Korea's Kosdaq is eventually going to spill over into similar tech stocks in Hong Kong that haven't quite caught up yet. Second, it's all about managing risk. It uses some pretty fancy math to measure how choppy the market is, which helps it decide exactly how much to bet and, crucially, when to get out. And third, it's a learning machine. It constantly takes in new data and updates its own beliefs about the market, which helps it find better and better times to get in. And this chart right here, this shows you exactly why that momentum idea is so powerful. This is the ADX indicator, and anything over 25 means you have a strong trend. Look at the Kosdaq, an ADX of almost 50. That's not just a trend, that is a screaming strong trend. Meanwhile, the Kospi is just getting started, and China's market barely has a pulse. This is the perfect setup for that kind of quant strategy. All right, now for the part everybody wants to know. Where do things go from here? Let's get into the specific forecasts from the report for the rest of January. The report is definitely still bullish. It's calling for the Kospi to punch right through that 5,000 level and close above 5,100. That's a nearly 4% gain from here. The Kosdaq 150 is expected to lead the pack with another 5.4% jump. China looks set for a healthier rise of almost 3%. But look at Baidu. It's the real standout, projected to surge over 11%, probably on all the excitement around its new chip unit. So, if you zoom out and look at the big picture, the report is putting a 65% chance on this bull run continuing. That's pretty high conviction. It sees only a tiny 15% chance of a real downturn, with a 20% chance the market just kind of catches its breath. According to this analysis, the odds are clearly stacked in favor of the bulls. So, we have covered a ton of ground. After all of that, what's the most important thing you should take away from today's analysis? It really boils down to three big things. First, never forget that markets are about people. They're driven by psychology, mood, and these deep historical cycles, not just the latest economic report. Second, what's happening in Korea isn't just a fluke. It's being powered by this incredible synchronization of positive cycles, right as major political risks are melting away. And third, China's market is telling two completely different stories at the same time. It's all in on sectors with clear rules, like tech, and it's running away from sectors where the rules are a mess, like property. And that leaves us with one final big question to chew on. Today was all about psychology winning out over raw data. So as our AI and our quant models get smarter and smarter, what if their most valuable skill, their real killer app, isn't just crunching economic numbers, but actually learning to read the complex and often irrational mind of the market itself?